Hi everyone, thanks for joining us today. I'm Matt Kletzley. We're going to talk about deceptive transfer coverage. One of the things that you'll hear a lot of times in the general environment in insurance is the term social engineering. The people who understand that the best tend to be the cyber underwriters, but it is an endorsement that's available on crime policies. In the design of this policy, what we wanted to do was be able to provide a complete small to middle market solution for insureds wherever they may be in their buying spectrum. And one of those buying spectrum opportunities is in crime coverage, being either monoline or in a package or in a BOP. So what we wanted to make sure was that if they were buying a policy and they were doing it through their package or their BOP, that there would be certain crime coverages that were part and parcel of the cyber world and would be coverages that would make sense to them to have involved on a cyber policy. So we have our crime endorsement that adds a couple of different coverages, and one of those coverages is what we've called deceptive transfer. So when you talk about deceptive transfer or you hear about deceptive transfer, you'll usually hear someone else referring to it more broadly as social engineering. So social engineering it goes beyond just the crime portion that we're providing in our deceptive transfer coverage. Social engineering actually goes to any of the types of maneuvers by someone who's looking to gain access to a system that are a confidence scheme. So they're looking to get someone to either click a link or open an email or open a tweet or find a way to get them to be enticed into going into something that they think is from someone they know, or it's for something that they have a particular interest in, so it would be an organization that they know. So when you look at the whole of social engineering, that includes the phishing attacks, the spear phishing attacks, any of those emails that you'll see about. Sometimes you'll see a friend send you an email that says, "Hey, I'm in Egypt. I'm stranded. I've lost my wallet, my passport. I have no money. Can you wire me $500? This is the account that you can wire it to, and I can get it from Western Union." So it's one of those types of fraudulent misrepresentations that they utilize the information that's available about either an employee or about someone that they're able to find information on in the social media world, and then utilize it against them to entice them to give them access to a system. So when this happens for employees, often it's happening with the intent to get an accounting department to run a transaction and distribute funds on a wire transfer. So I'll give you an example, a personal example. My cousin actually runs a nonprofit organization overseas in a very small, fairly poor country. And he sent me an email. He said, "Hey, you were talking about cyber, and I got this email from my CFO asking why we're going to distribute $6,621.97. I said, "Oh, there are a couple of options here. One, they either have hacked your email account, so you need to check that, or two, they guessed right." So there are a couple of ways that this can happen. They can figure out or try to guess at what is the email address format for an organization, and they can send it in unsolicited. Or they can actually get into the account, figure out the passwords, and be able to sign into someone's account because they're utilizing some of the different ways that they can work through. So in this case, they checked their system. It was not a hack into the account, but fortunately the CFO called and said, "Hey, why are we sending this money and I don't have any record of us owing it?" He said, "I don't know what you're talking about." And so something as simple as an internal control of double checking, getting two signatures on something. The basic internal controls that you see for so many crime policies that are part of the crime policy questions can be something that will help in a deceptive transfer situation. So when you look at the next page, when we're talking about the claim sources, and we talk about hackers being a claim source, what if the hackers could actually get your employees to work for them to get them into the system? That's what the concept under deceptive transfer is they're actually enticing, and often it's utilizing either the CFO or the CEO's email address. But when you look at it a little more closely, sometimes it's not the actual email address, or they put it so that it'll show up like it shows up in your organization's emails. So it all depends on whether or not they've accessed the system or they haven't accessed the system as to how far the penetration goes. But these pings may be happening on a regular basis to people simply from information they're able to gather about the organization. So as we look through and you look at the different aspects, one of the things we talk about often with cyber is that physical access is the best friend of the hacking community. So instead of having to get physical access themselves, if an employee can open them up to getting into the system, that's enough. And that's where a lot of the social engineering comes in. But the deceptive transfer is specifically for the actual transfer of the funds out of the organization into a bank account that is typically overseas, and if not requested back in time, maybe already closed and the money is transferred. So when you look at this example, if you take a minute and read this closely, we can talk about it. Oh, and by the way, just if you have questions, please send them through type them through, and we'll have some time at the end for answering questions. But also, if you have answers for some of the questions I'm going to ask on this, please jump in and let me know what you think. There are a couple of things that can be tells on these kinds of situations. So if the email address is perfect that they send through for someone, that can be a problem, because then it would literally bounce back to the person they're saying has authorized it, and it would alert them that something has happened and they're getting it. But often there will be just a little bit of a manipulation that you don't notice as much. It's not perfectly clear. So in this example, we've got an organization that has someone they know, so it's a vendor or a client, in this case the client, and the organization gets a confirmation from senior management into the accounting department that they need to transfer funds. Now notice one of the things about the funds aren't $95,000 even. The funds actually look like what an invoice would look like that would be coming from a supplier when you add tax. So they're not dumb when they send these requests. They send them in odd numbers with all the way down to the cent, because that's how so often the invoices will come in from an organization. So often there's an urgency and a time delay. So they are suddenly under the gun. They put the accounting department under the gun. Everybody's got a sudden sense of urgency. It's a panic point, and if they can find the right spark to set that panic point in motion, they're hoping what they can do is bypass the internal controls. Now what's interesting is some organizations face these challenges and the money gets transferred because they don't have sufficient internal controls. So internal controls can solve a lot of this problem, but not necessarily all of it, especially if they've actually gained access to the email, because they can take over the email and actually give the confirmations back again. So does anyone see anything that could have been a tell in this when the accounting department went ahead and got it transferred off and sent the money? Is there anything in here that might have given away that there's a problem? I'm going to give it a couple of seconds to just see if anyone types anything in. That's it. So we've got our answer. The company name is spelled wrong. Absolutely. Notice that the way it was done. It's IL illustrations, and when it's sent from the CEO, it's ILL. And that's what happens a lot of times in the email address. The email address is off by one digit, or it has a number inserted somewhere that no one notices because it looks familiar, because your brain actually tricks you into believing the email address that comes through. But it actually has one digit off or one number off, or it's got too many digits, just so that it's just different enough that they can set it up. They can set up the email and then put in the wrong routing address. So there are little things that can happen that deal with this. Now, I mentioned earlier that crime policies, you can get this coverage on it. So some crime carriers, I would imagine most crime carriers have the ability to do it. I know that there is some reluctance to do it because this is a multi-billion-dollar industry. And a lot of this industry is dealing with organized crime. So it's not just the teenager sitting around drinking their Code Red and figuring out how to get some money to pay for their next 12-pack of Code Red. It's often this is done by organized crime because it is big business, and often you're looking at organizations that are overseas that are prompting this. So there are little things, there are little tells, but it's one of the spaces that's interesting in this marketplace. And we've brought it in to the policy with it can be done through our portal at $100,000 sublimit, or if you have sufficient internal controls, we can actually expand that to a maximum of a $250,000 limit of liability. When it gets over $250,000 of liability and it's gone through the system and it's gotten the blessing of the organization, we have a little bit of a concern turning what's primarily a cyber policy into a full-blown crime policy. So with that, I just wanted to point out a couple of articles that have actually come into play in the last 2 weeks. So we literally have 3 different articles that are talking about security and social engineering. In this one, it actually talks about how it was the most identified attack technique in 2015. In the next one, it talks about how your digital footprint actually enables these attacks. So basically, the more information that's out there, then plausible everyday situations become something that they can attack and exploit. And so this was I thought a pretty quippy headline, because really what it is when the enticement for someone to do something that ends up getting them in is sometimes that shift that makes it a challenge for organizations, because literally by opening something and clicking on a link that looks like something fun, or that game that's going around on everyone's desk and people open it and play it for 2 minutes, those are the kind of things that are opportunities for hackers to utilize social engineering to infiltrate the system and be able to gain access. So with that, I'm going to open up to questions. So the first question we have is there any way ACE would bump up more than the $250,000 sublimit? Excuse me. That's something that, while the program is fairly new, we will definitely entertain with them, and we'll continue the discussions with them. We meet with them on a regular basis. We will check into being able to do that. And generally, we have had a very good working relationship that we've been able to work through any special circumstances that we need to work on. This is one of the coverages that's a little bit nerve-wracking for all of us, because there are just so many opportunities for it to happen across so many segments, because the entry point is the mistake of an employee thinking it's correspondence of some shape or form from someone they know. So that's where it makes it really challenging, because even with all the training, when they're convinced it's someone they know, they still click on it, open it, and go through the process that gets them into the systems. Okay, do we have any other questions? Okay, so another question that just came in is, how does the social engineering process have to be received? Is it only from emails? So actually, it can be a telephone call, email, text, instant message, social media related communication, any other electronic instruction. It could be spear phishing, social engineering, pretexting, diversion, basically confidence schemes. Anything that is going to get an employee to rely upon it, and is sent by someone who is stating that they're either an employee, so in the case of the CEO saying it needs to go out, or a customer, client, vendor, etc. So it's someone that has a relationship with the organization, and that someone is falsifying their identity as being part of that organization. And then the other thing is, as long as whatever the internal controls are in place for the organization are followed, the coverage is available. So it's an interesting space, because there is so much of it happening so often. And so often when we go out to see brokers and we talk to clients, we just had one of those. We headed off last week. The best I had was I walked in and someone said they had 3 within the last 5 days of me walking into the office, it was great. The internal controls caught it and they kept it from going through. But this can be really sophisticated. So the one I saw that was pretty sophisticated was they even knew the timing for delays on making changes that were inside the internal control procedures for an organization. So they had changed the fax number for receiving the routing to double check that the fax came from the right place, and they waited for 30 or 45 days before they actually went and asked for the transfer. So there's some sophisticated stuff out there. Okay, so next question is, how is coverage different from computer funds transfer fraud? I'm a little rusty on my crime coverage on the computer funds transfer fraud, so I'm going to have to get back to you on that. But when you look at this from the electronic funds transfer fraud coverage, that's where the bank is fraudulently induced. That's also something that's covered on the policy. We didn't decide to cover it on a webcast just because it's part of a standard monoline crime policy. But we'll have to come back and get an email out to everyone on the computer funds transfer fraud and the differences from what we're delivering here. Next question is, do banks have any responsibility for releasing funds that are fraudulently generated? So it's an interesting question. There was a case recently where the bank did not have to pay off of their blanket banker's bond for funds that were released because they went through their procedures. It all depends on the scenario. Technically, the bank's releasing the funds on a fraudulent transfer. Often they're not the ones in this portion of the coverage that we're offering that would actually have that decision making. When the wire transfer request is put through and it's authenticated by them, it's coming from the actual client's accounting department. So it's not like someone is fraudulently sending it through and imitating the accounting department. The accounting department actually willingly sends this through because they're relying on the information that was provided to them that they're supposed to, and whatever authorizations that follow. So the next question is, what's the average cost to defend these types of claims? Well, this is actually not a defense coverage. This is literally to pay for the funds, which is what you don't have in the standard cyber policy. So the standard cyber policy will take care of getting the network back up, getting the coverage covers getting the network back up, getting the breach sealed, getting everything back to even with where it was before the breach, and then defending any liability of suits. This particular situation is paying for the actual money that's sent out. So that's what the coverage is specifically for. And then, what was the first deceptive transfer you saw, and what is the most severe claim you have seen? Okay. The first deceptive transfer I saw was actually relatively small. It was and it wasn't on this book. It was a $4,000 request, so they kept it fairly low so that it wasn't something that triggered that much of a notice from someone. The worst one that I saw was, I didn't see it, I was actually told about it by a broker, it was over $200,000 that they had transferred. There is one that was actually a social engineering claim. It wasn't clear whether or not it was something that was actually from the company and the company was involved in, and it was actually a real estate transaction where someone was induced to transfer $800,000 on a commercial real estate down payment or commercial real estate sale. They had sent an email off to a company and said that, you know, you should put the money into this routing number at this bank account, and it was incorrect. It was actually their email, the personal email had been hacked. So it was a social engineering issue, but it was something that wasn't because of the company being hacked. It was because an individual was actually hacked. So looks like we're out of questions. Thank you everyone for attending, and we'll make sure that we do get an email out to everyone about the difference comparison with the computer funds transfer fraud. Thank you and have a good day.